Welcome back to the deep dive. Today, we're going to be tackling investment research.
Yeah.
All those articles and notes you've sent over really show that you're ready to move beyond those
Yeah.
buy low, sell high basics.
Yeah, you want to understand the real tools and strategies used
Yeah.
to evaluate investment opportunities, and
Yeah.
and that's what we're here for.
Exactly. We're going to equip you with a solid understanding of
Right.
how professionals approach investment research so you can apply it to your own portfolio.
It's not about guaranteeing you'll pick the next hot stock,
Right.
but about giving you the knowledge to make informed financial decisions.
So first things first, what exactly is investment research? I have to admit, I
Yeah.
sometimes picture those stereotypical Wall Street guys in movies, hunched over blinking screens
Yeah.
with mountains of data.
There's definitely data involved, but it's not just about staring at charts until you see double.
Mm-hmm.
It's about systematically analyzing investment opportunities,
Yeah.
understanding the potential rewards,
Mm-hmm.
and just as importantly, assessing the risks.
It seems like that risk piece is often forgotten,
That's right.
especially with all the hype you see online these days.
Absolutely. And that's where aligning your research with your personal goals becomes crucial.
Mm-hmm.
What are you hoping to achieve with your investments?
Right.
Long-term growth, steady income,
Yeah.
and how much risk are you comfortable taking on?
Right.
Those answers will shape your entire approach.
So it's really a personalized journey, not a one-size-fits-all approach.
Exactly.
Now let's talk about the different types of investment research.
Okay.
I'm seeing terms like fundamental analysis, technical analysis, quant.
Mm-hmm.
Is there a secret decoder ring for all this?
No decoder ring needed. Think of it like exploring a new city.
All right.
Technical analysis is like walking around observing the flow of traffic,
Okay.
the popular spots.
Yeah.
It focuses on price trends and patterns to predict future market behavior.
Okay, so technical analysis is about spotting those trends, reading the market signals.
Yeah.
What about fundamental analysis?
That's where you dig deeper.
Okay.
It's like researching the city's history, its infrastructure, its economic engine.
Mm-hmm.
Fundamental analysis is about understanding the intrinsic value of an investment,
Okay.
whether it's a company, a bond, or even real estate.
So with fundamental analysis, you're trying to determine if an investment is truly valuable.
Yeah.
Not just hyped up. Like with a company,
Right.
you're going beyond the stock price and looking at their financials, their
Right.
management team, their competitive landscape.
Exactly. You're looking for that margin of safety.
Right.
Is the market undervaluing this asset?
Mm-hmm.
For example, you might analyze a tech company's earnings growth,
Yeah.
not just this quarter, but over time to understand their trajectory.
Okay.
Or you might compare their debt levels to their competitors to assess their financial health.
And how would this apply to something like a bond?
Sure.
I know they're considered lower risk, but there are still factors to consider, right?
Yeah, absolutely. With bonds, fundamental analysis might involve looking at the issuer's creditworthiness.
Yeah, okay.
Are they likely to default on their debt?
Mm-hmm.
You'd also analyze interest rate trends and the bond's yield to assess its potential return and risk.
So both stocks and bonds can benefit from that deep dive into the fundamentals,
Yeah,
looking at those underlying factors driving value.
exactly.
Now let's move on to technical analysis.
Okay,
You mentioned it's about charts and trends.
right.
Is it really like reading tea leaves,
Yeah.
but with stock prices instead of tea?
There's definitely an art to it,
Mm-hmm.
but technical analysis uses concrete data.
Okay.
Think of it like this fundamental analysis tells you what to buy,
Okay.
while technical analysis helps you figure out when to buy.
Okay. I'm intrigued. So instead of focusing on the company itself,
Right.
you're analyzing the stock's price history, trading volume, those kinds of things.
Precisely.
Yeah.
Technical analysts look for patterns and indicators that suggest
Mhm.
where the price might move next. For example, they might use candlestick patterns,
Yeah.
which visualize price action over a specific time period
Mm-hmm.
to predict reversals or continuations in the trend.
Okay.
Or they might look at moving averages,
Yeah.
which smooth out price fluctuations
Okay.
to identify support and resistance levels.
So if fundamental analysis is the detective work,
Yeah.
technical analysis is more like being a market psychologist
Mm.
trying to predict how other traders will react.
You could say that.
Yeah.
It's about understanding crowd psychology
Okay.
and identifying those moments where momentum might shift.
Right.
And it's not just limited to stocks. Technical analysis can be applied to any asset class,
Yeah.
from bonds and commodities to currencies and even cryptocurrencies.
That makes sense. If those patterns repeat across markets,
Right.
you could theoretically apply the same principles.
Exactly.
Now, I have to ask about quantitative analysis.
Okay.
This one seems shrouded in mystery.
Yeah.
Do you need a math degree to even understand it?
You don't need a PhD. But
Oh.
quantitative analysis, or quant, as it's often called,
Okay.
does rely heavily on mathematical models and algorithms.
Okay.
It's about using statistical analysis to find hidden opportunities and make data-driven investment decisions.
So it's like using the power of math to unlock market secrets that the human eye might miss.
Exactly. For example, hedge funds often use quantitative analysis for high-frequency trading,
Oh, wow.
where algorithms execute thousands of trades per second based on complex calculations.
I have to admit, that sounds a bit intimidating. Can you give me a more relatable example
So-
of how quantitative analysis might be used?
Absolutely.
Yeah.
Let's say you're building an investment portfolio.
Okay.
A quantitative approach might use a model like the Markowitz efficient frontier to determine the optimal mix of assets based on your risk tolerance and desired return.
Okay.
It's about finding that sweet spot where you're maximizing returns for a given level of risk.
So instead of just picking investments based on gut feeling, you're using data and models to create a more efficient
Yeah.
and potentially profitable portfolio.
Exactly.
And what about managing risk? Does quantitative analysis play a role there?
Absolutely. Quants use models like value at risk, VANR,
Okay.
to estimate the potential losses of a portfolio over a specific time period. This helps investors understand the downside risk they're taking on and make more informed decisions
Okay.
about how to mitigate that risk.
Okay, so we've covered fundamental, technical, and quantitative analysis.
Yeah,
It seems like each approach has its own strengths and limitations.
right.
But before we dive into specific companies or assets, it's important to consider the bigger picture, right?
You're spot on.
Yeah.
Even the most promising investment can struggle if the overall economic environment is unfavorable.
Right.
That's where macroeconomic and industry analysis come in.
Right, because you could pick the best company in the world,
Yeah.
but if the whole economy tanks,
That's
it's going to be
right.
tough to make money.
Exactly. Macroeconomic analysis
Yeah.
involves looking at broad factors that shape markets and economies. Things like GDP growth, inflation, interest rates, government policies.
Yeah.
They all have a ripple effect on investments.
So it's about connecting those dots between what's happening in the world
Yeah.
and how it might impact your portfolio.
Precisely. For example, if you're considering investing in real estate,
Okay.
you'd want to analyze interest rate trends.
Mm-hmm.
Rising interest rates generally make mortgages more expensive,
Right.
which could cool down the housing market and potentially impact property values.
That makes sense. It's like zooming out to see the bigger landscape before making a decision.
Exactly.
And what about industry analysis? How does that fit in?
Well, just as the overall economy influences individual investments, each industry has its own dynamics and trends.
Right.
For instance, the tech sector is known for its rapid innovation.
Mm-hmm.
So understanding trends like artificial intelligence, cloud computing, and cybersecurity is crucial
Yeah.
when analyzing tech companies.
So it's about knowing the key players in that industry, the competitive landscape, and the forces that are shaping its future.
You got it. It's like zooming in from the macro level to the micro level, getting a deeper understanding of the specific sector you're interested in.
Right.
But even with all this analysis,
Yeah.
fundamental, technical, quantitative, macro, and industry, there's one more piece of the puzzle that investors often consider. Sentiment analysis.
Sentiment analysis. Is that about figuring out if investors are feeling bullish or bearish? Like reading the mood of the market?
You're on the right track.
Okay.
Sentiment analysis attempts to gauge the collective psychology of investors.
Okay.
It's about understanding how they feel about a particular asset
Yeah.
sector or the market as a whole.
It sounds a bit like trying to predict the weather. Notoriously difficult to get right. But I can see how understanding investor sentiment could be useful.
Absolutely.
Right.
It could be particularly helpful in fast-moving markets like cryptocurrencies,
Yeah.
where news and social media can have a big impact on price swings.
So you might look at social media chatter, news headlines, analyst opinions,
Yeah.
all those things that contribute to the overall buzz around an investment.
Exactly. You might track mentions of a company on Twitter,
Okay.
analyze the tone of news articles, or even gauge the level of activity on online forums dedicated to specific investments.
It's like eavesdropping on the conversations happening around the water cooler,
Yeah.
but on a much larger scale.
Exactly. And while social media can be a bit of an echo chamber,
Right.
it can still provide valuable insights,
Yeah.
especially when combined with other sentiment indicators.
Are there any other tools specifically designed for sentiment analysis?
Yes.
I imagine there are companies out there trying to quantify this somewhat elusive concept.
Absolutely. There are dedicated sentiment analysis platforms
Okay.
that use natural language processing and machine learning algorithms
Yeah.
to analyze
Okay.
news articles, social media posts, and even online forums to gauge the overall sentiment surrounding a particular stock or asset.
So they're basically using technology to read the room
Yeah.
and tell you if investors are feeling optimistic or pessimistic.
That's a simplified way of putting it, but essentially, yes.
Okay.
These tools can be quite sophisticated,
Yeah.
and they're becoming increasingly popular among hedge funds and other institutional investors.
It seems like the world of investment research is constantly evolving.
Yeah,
With new tools and technologies emerging all the time.
absolutely.
But with all this data and analysis at our fingertips, it's easy to get lost in the weeds.
Right.
So let's bring it back to the fundamentals. Why is investment research so important in the first place? What are the key benefits?
At its core, investment research empowers you to make informed decisions about your money.
Okay.
It's about moving beyond gut feeling and hearsay
Right.
and basing your choices on data analysis and a thorough understanding of the risks and potential rewards.
So it's not just about picking the stock that's going to go up the most. It's about making smart choices that align with your goals,
Exactly.
your risk tolerance, and your overall financial well-being.
Precisely. Investment research can help you achieve those key benefits:
Yeah.
informed decision-making, risk management, maximizing returns, and ultimately achieving your financial goals.
So whether you're saving for retirement, a down payment on a house, or simply trying to grow your wealth,
Yeah,
investment research is the foundation of a successful investment journey.
absolutely. It empowers you to be an active participant in your financial future, not a passive bystander.
And with the right tools and resources,
Yeah.
it doesn't have to be an intimidating process.
Right.
In fact, it can be quite fascinating to learn about the markets, explore different investment strategies,
Yeah.
and discover opportunities that you might have otherwise missed.
That's the beauty of investment research.
Right.
It's a journey of continuous learning and discovery.
Okay. We've covered the what, the why, and the how of investment research. We've explored different types of analysis.
Right. Discussed essential tools and resources,
Yeah.
and even delved into the world of sentiment analysis.
I did.
I have to say, I'm feeling much more equipped to navigate this complex world.
Good.
But before we wrap up,
Yeah.
I want to hear your final thoughts on this topic.
Okay.
What's the one key takeaway you want our listener to remember?
Well, just like any journey, you need a starting point. The first step is to define your investment goals.
That makes sense. Your research process will look very different
Yeah.
if you're saving for a down payment on a house versus planning for retirement decades from now.
Exactly. Ask yourself, what are you hoping to achieve with your investments? What's your time horizon? And how much risk are you comfortable taking on? These questions lay the foundation for your entire research strategy.
It's like setting those GPS coordinates before you start driving.
Right?
You need to know where you're headed
Yeah.
before you can map out the route.
Precisely. Once you have a clear destination in mind, you can choose the right investment vehicle. Okay, so that's step 2, figuring out what to invest in.
Right.
Stocks, bonds, real estate, crypto. The options can feel overwhelming.
There's a lot to choose from, and each asset class has its own risk and return profile. Your choice will depend on those goals we just defined, along with your personal risk tolerance and how involved you want to be in managing your investments.
So if you're someone who prefers a hands-off approach and wants to minimize volatility,
Right.
you might lean towards a diversified portfolio of low-cost index funds. But if you're comfortable with more risk and enjoy the thrill of picking individual stocks,
Yeah.
you might take a more active approach.
Exactly. Your investment vehicle should align with your overall strategy and comfort level.
Okay.
Once you've made those key decisions, goals, and asset classes, it's time to roll up your sleeves and start gathering data.
Okay, but we're not talking about just Googling a few stock tickers, right?
Right.
Where do you find reliable, in-depth information? It feels like there's a fire hose of data out there, and it's tough to know what to trust.
You're right. It can be overwhelming. But there are reputable sources you can turn to.
Okay.
For publicly traded companies, start with their financial statements,
Okay.
the income statement, balance sheet, and cash flow statement. These documents provide a snapshot of the company's financial health and performance.
So it's like getting under the hood and seeing how the engine runs.
Right.
But I have to admit, those financial statements can be pretty dense.
Yeah,
Are there any resources that help break them down and make them easier to understand?
absolutely. Websites like Yahoo Finance, Google Finance, and Morningstar offer user-friendly interfaces
Okay.
that present key financial data in a more digestible format.
Mm-hmm.
They also provide news articles, analyst opinions, and even peer comparisons, so you can see how a company stacks up against its competitors.
Those are great resources for getting a general overview.
Yeah.
But if you really want to dig deep, you mentioned the SEC's EDGR database.
Yes, EDGR is the holy grail of company information. It's where publicly traded companies file all their official documents, including those detailed 10K reports and annual reports.
So if you want the unfiltered, straight from the source information,
Right.
EDGR is the place to go.
Exactly.
But I imagine it takes some practice to navigate that database and extract the key insights.
It definitely helps to have some accounting knowledge,
Yeah.
but there are plenty of online guides and tutorials
I
that can
get.
help you get started.
Yeah.
And remember, your brokerage platform can be a valuable resource as well.
Right, because nowadays, many brokerages offer research tools and reports directly on their platforms.
Exactly.
So if you're already using a platform like Fidelity or Schwab, it's worth exploring their research offerings before looking elsewhere.
Absolutely.
Oh,
They often provide access to analyst ratings, industry reports, and even proprietary research that can be incredibly valuable.
okay.
And speaking of analysts, don't underestimate the value of reading research reports and analyst opinions.
Yeah, those reports can be helpful, but I've always wondered how, which analysts to trust. They don't always get it right, do they?
You're right. It's important to be discerning.
Yeah.
Look for analysts with a proven track record and a deep understanding of the industry or company they're covering. And don't just rely on one opinion.
Right.
Compare different perspectives to get more balanced view.
So it's like getting a second opinion from a doctor. It never hurts to get another perspective.
Exactly.
Now, for those of us who love charts and graphs, what are some tools for charting and technical analysis? I'm a very visual learner,
Sure.
so I find it helpful to see those trends and patterns laid out visually.
There are some fantastic platforms out there that cater to visual learners, like TradingView and MetaTrader are incredibly popular among technical analysts.
Yep.
They offer sophisticated charting tools that let you visualize price movements, apply technical indicators, and even backtest different trading strategies.
So if you want to get really hands-on with your technical analysis,
Right.
those are the platforms to check out.
Right.
You mentioned backtesting. That sounds interesting. Is that like running a simulation to see how a strategy would have performed in the past?
Exactly. You can test out different indicators,
Okay.
entry and exit points, and risk management strategies to see what would have happened if you had traded a certain way historically.
Okay.
It's a great way to learn and refine your approach.
Okay, so we've got financial websites, brokerage platforms, research reports, charting tools. It's quite a toolkit. What else should we add?
Well, if you're interested in understanding the bigger economic picture, you'll want to familiarize yourself with economic indicators.
Right, because those macroeconomic forces can really move the markets. Where do you find reliable data on things like inflation, interest rates, and GDP growth?
A great resource is the Federal Reserve Economic Data website, or FR.
Yeah.
It's a treasure trove of economic data going back decades.
Wow.
You can track trends,
Yeah.
compare different indicators, and get a sense of the overall health of the economy.
So if you want to see if the economy is heating up or cooling down,
Yeah.
FRE is your go-to source. And speaking of gauging the temperature, what about those sentiment analysis tools we discussed earlier? How can you actually track the mood of the market?
There are a few ways to do this. Social media platforms like Twitter and StockTwits can be great barometers of investor sentiment.
Okay.
You can track mentions of specific companies, see what people are saying about their products or earnings announcements, and get a sense of the overall buzz.
It's like eavesdropping on the conversations happening around the water cooler, but on a much larger scale.
Exactly. And while social media can be a bit of an echo chamber,
Right.
it can still provide valuable insights, especially when combined with other sentiment indicators.
Are there any other tools specifically designed for sentiment analysis?
Yeah,
I imagine there are companies out there trying to quantify this somewhat elusive concept.
absolutely. There are dedicated sentiment analysis platforms that use natural language processing and machine learning algorithms
Wow.
to analyze news articles, social media posts, and even online forums. to gauge the overall sentiment surrounding a particular stock or asset.
So they're basically using technology to read the room and tell you if investors are feeling optimistic or pessimistic.
That's a simplified way of putting it, but essentially, yes.
Okay.
These tools can be quite sophisticated, and they're becoming increasingly popular among hedge funds and other institutional investors.
It seems like the world of investment research is constantly evolving, with new tools and technologies emerging all the time. But with all this data and analysis at our fingertips, it's easy to get lost in the weeds. So let's bring it back to the fundamentals. Why is investment research so important in the first place? What are the key benefits?
At its core, investment research empowers you to make informed decisions about your money. It's about moving beyond gut feeling and hearsay and basing your choices on data analysis, a thorough understanding of the risks and potential rewards.
So it's not just about picking the stock that's going to go up the most. It's about making smart choices that align with your goals, your risk tolerance, and your overall financial well-being.
Precisely. Investment research can help you achieve those key benefits. Informed decision-making, risk management, maximizing returns, and ultimately achieving your financial goals.
So whether you're saving for retirement, a down payment on a house, or simply trying to grow your wealth, investment research is the foundation of a successful investment journey.
Absolutely.
Yeah.
It empowers you to be an active participant in your financial future, not a passive bystander.
And with the right tools and resources, it doesn't have to be an intimidating process. In fact, it can be quite fascinating to learn about the markets, explore different investment strategies, and discover opportunities that you might have otherwise missed.
That's the beauty of investment research. It's a journey of continuous learning and discovery.
Okay, we've covered the what, the why, and the how of investment research. We've explored different types of analysis, discussed essential tools and resources, and even delved into the world of sentiment analysis. I have to say, I'm feeling much more equipped to navigate this complex world. But before we wrap up, I want to hear your final thoughts on this topic. What's the one key takeaway you want our listener to remember?
I think the most important thing to remember is that investment research is not about finding a magic formula or a guaranteed path to riches.
Yeah. It's not about timing the market perfectly or picking the next hot stock.
Exactly. It's about developing a process, a framework for making informed decisions that align with your individual goals and risk tolerance.
So it's about taking control of your financial future
Yeah,
and becoming a more confident and knowledgeable investor.
precisely. And that journey starts with a commitment to continuous learning and a willingness to put in the time and effort to do your research.
It can definitely feel daunting at first, especially with so much information out there.
Mhm.
But as we've discussed, there are incredible resources available to help you along the way.
Absolutely. And the more you learn, the more empowered you'll become.
I like to think of it as building a muscle. The more you exercise your research skills, the
Right.
stronger and more intuitive they become.
That's a great analogy.
Yeah.
And just like any muscle, it takes time and consistency to see results.
So don't get discouraged if you don't become a master investor overnight. It's a journey, a process of continuous improvement.
And the rewards are well worth the effort.
Absolutely. Now, before we wrap up, I want to leave our listener with a thought-provoking question.
What aspect of investment research sparked your curiosity today? What will you explore further as you embark on your own investment journey?
Will you delve deeper into fundamental analysis to uncover hidden gems? Experiment with technical analysis to identify those market trends. Or perhaps even explore the world of quantitative analysis and those powerful algorithms.
Remember, the beauty of investing is that there's no one-size-fits-all approach. The key is to find what works best for you, your goals, and your individual circumstances.
So go out there, explore those resources we discussed, experiment with different approaches, and most importantly, never stop learning.
Because the more you know, the more confident and successful you'll be as an investor.
That's a great note to end on. Thanks for joining us on this deep dive into the world of investment research. We hope you found it valuable and insightful.
And we wish you all the best on your investment journey.
Happy investing, everyone.